What this is looking at is all of the coins in the supply. Each bar height is basically how many coins. You can see here 610,000, 820,000, 800,000, a huge amount of coins at these particular price buckets. Now, as you can expect, this gray bar here is our current level. It's 20,600. But you can see here, I mean, it stands out. We have a very, very large set of bars here. There's been an enormous changing of hands down here in this consolidation range. Now, again, back to April 2021, you will remember that we were talking about a top-heavy market back then. We were at 60,000. This node was up here, and we had very little volume below it. What that signified is that we essentially had a whole lot of coins that if price went below it, they'd all be in loss and they may become a sell hazard. Well, right now, this is essentially the exact opposite. We have a bottom heavy market. A huge amount of coins have been redistributed to lower prices. Those owners have a much lower cost basis. Of course, they may go lower. We have to always keep these things in mind, but we have a holder base with a much lower cost basis. And now that we have this gray bar sitting at the top end of this range, the same way that a top heavy market is now in loss and thus potentially at risk of selling because of that financial pain, here they're in profit. Got the foundation. What we need to see is, can it stick the landing? Now, with that frame of reference, what we're looking at here is two different sets of charts. So the top row here is the 2018 market. So when we collapse down into that pricing range is shown here, and note how all of this supply, note how there was almost none in the $3,000 to $4,000 range. And then here we are after that entire consolidation process. Look how much volume was redistributed from all the way up here down into this range. So this is showing a changing of ownership, a capitulation. Somebody capitulated, somebody else stepped in, and a floor was established. So the amount of coins between this point and this point was 22.7% of the entire supply was redistributed. Now this is our current market. You can see very similar. We had almost none on that first entry down into that 20,000 range back in June. We had almost no coins down there. And now look at this enormous volume node that we've got that's started to establish itself. Now, what we're looking at here is about 14% of the supply. So we haven't had the same amount of coin distribution, but it is still significant. 14% of the supply being transferred from somewhere else down to this level is still a fairly healthy thing to see.
Welcome Bitcoin friends, it's Bitcoin Mamo. So today's video will be a little bit different. I am going to break it into two parts, one released today and one tomorrow, as I am trying to make the videos a bit shorter. In today's video, we'll look at the US stock market. We'll also do a detailed comparison of the 2014-15 bear market for Bitcoin with our current bear market. And we'll also take a look at Bitcoin on the 2-week time frame, comparing all previous bear markets with our current one. And then tomorrow I will release the second half of the video where we'll look at Bitcoin on the weekly time frame, the daily time frame, maybe the 4-hour time frame, and we'll also take a look at market cipher. So let's get straight into it. I'm going to start here looking at the US stock market. This is the S&P 500 futures chart. And in the previous video, which was a couple of weeks ago, we were somewhere down here. And we did point out we did have this triple bullish divergence on the weekly. We can see lower lows on the price action while making higher lows on the RSI. And we said this is quite significant, and I was expecting a bounce from that. We did see a decent bounce so far, and currently we're getting some resistance in this order block. We do have the interest rate announcement tomorrow. I think most people are expecting a 0.75% increase. I believe that's pretty much priced in. If we do get a 0.5% increase, obviously we'll get quite a decent bounce in the stock market, as it shows the Fed backtracking a bit. We also see we did bounce off the 200-week moving average in red here. And just looking back at previous times, we had triple bullish divergence on the weekly. We can see going back to 2015 here. After this correction down, we did have 3 lower lows on the price action while making 3 higher lows on the RSI. Again, triple bullish divergence. And we also came close to that 200-week moving average in red. The time before that was at the bottom of the crash after the financial crisis. We see 3 lower lows on the price action while making 3 higher lows on the RSI. And both of these times, this was the bottom of the overall correction. We do have several order blocks drawn in here on the weekly. These come from these red candles in an uptrend. These order blocks are areas of supply and demand. It's a break in a trend. Time was spent here and therefore volume. And these levels become of interest later on when we interact with them. They can act as support or resistance levels. We can see we are getting resistance at this top order block here for the time being. But if we do also pull up the VPVR, the amount of volume traded at certain price levels, we do see the most amount of volume was traded pretty much where we got this correction. We'll have to see if we can get above this level. If we are able to close above this order block and above this spike on the VPVR, then we would be looking possibly to test this trend line or also the golden pocket area, taking the fib from the top to the bottom here. We see that golden pocket around this area. We do also see that 0.5 fib level here in line with that order block and the VPVR spike where we are getting this resistance. But I do think there's more to come on this move. A triple bullish divergence on the weekly is quite strong. It doesn't usually just last for a short time here. And we also see the stochastic RSI still coming up and looks like it has room to go higher. And another thing we can look at on the US stock market here is if we do pull up market cipher, we can see we did get a weekly green dot here. It has been confirmed at the start of this week. So I would expect a decent bounce from this, as we also have that bullish divergence on the RSI and also on market cipher. We can do it on market cipher is one of these blue waves is below this white line here, and we see higher lows on market cipher while making lower lows on the price action. And if we look back in history again at those two previous points with market cipher, we see a similar thing here. Back in 2015, we had that divergence with market cipher, and also that weekly green dot came in here. It was confirmed, and we saw that we did get quite a decent bounce after that. Looking back at the previous occasion before that, the bottom of the financial market crash, we see the same thing. Higher lows on market cipher, looking at the blue wave, and lower lows on the price action. So bullish divergence again. We got that weekly green dot after that divergence, got confirmed here, and then we did continue higher. But over to Bitcoin now, and we have been watching this model here. This is our current price action, the bull market and the bear market. And down the bottom here, this is the 2013 bull run and the 2014 to 15 bear market. And we've been looking at our current cycle here on the top and postulating that we didn't have a blow off top here. This was more of a manipulated top. We did have that China mining ban. It did put in a big correction here. And then, of course, we did make a slightly higher high here, but a lot of the indicators point to this being the actual bull run peak and this being more of an overactive dead cat bounce, where perhaps it was pushed up by institutions to get out of the market if they didn't sell their Bitcoin in this area. And we do remember a lot of people, including myself, were expecting 100K here, but we didn't have that blow off top like we did in the 2013 bull run. We had that Wyckoff distribution and that 50% correction down. So looking at it in this way with that model, what I've done here is I have lined up with these white dotted lines, just the peak of this dead cat bounce, also the overall bear market low here on both charts, and the peak of the next dead cat bounce after that, just so we can line up these charts. And we see on both charts, we do have this falling wedge pattern, and we are taking the first touch point from this dead cat bounce, as we're seeing this as an overactive dead cat bounce. But we see on both falling wedges, we had 2 touches on the top, 2 on the bottom. Again, alternating touches. This candle here did actually touch the top of this falling wedge. We see on the third touch on the upside, we did break bullish, and that confirmed the bottom of the bear market was in. And on our current price action, we also broke out of this falling wedge bullish here. And I also think along with that hash ribbon signal, that this also confirms that this was the bottom of the bear market. We did call that back here sometime in August when we saw that hash ribbon buy signal flash, and also the 2-week major green dot on market cipher. Just adding in some lines here, if we were to extend this trend line here, we can see it doesn't get the exact top, but sort of the range where that blow off top went to. And if we were to do the same thing with our current cycle here, we can see if we do extend that line, it does take us to around that 100,000 mark that everyone was expecting. And again, we were looking for that blow off top here, but it did play out different in this cycle. And if we did get that blow off top, we could see how this would be the dead cat bounce. And another thing to point out is taking it from this dead cat bounce here down to the bear market low, we saw a 74.97% correction. And just doing it with our current bear market, that drop is 74.51%. So very similar within 0.5%. And I do think there's a lot of similarities between both of these bear markets. Another thing I'm looking at here is looking at market cipher. This is the money flow on the 4-day chart. What we can see is we dipped into the red money flow here, pretty much at the top of this dead cat bounce. And we stayed in the red money flow all the way up until this point where we did flip green. And we saw once we did flip green, we started the next bull run. So applying that to our current bear market, we saw we also flipped into the red money flow here, pretty much at the top of this falling wedge, at the top of the overactive dead cat bounce. We are still in the red money flow. And if we were to line up these lines, perhaps we flip into the green money flow around the end of March. And that's where we really start taking off on the bull run. Again, it doesn't have to be the same, but we are seeing a lot of similarities here. So if we are going to have another push to the upside here, perhaps to that 25, 26K area, we can see it lines up here with around this point on the 2014-15 bear market. And that would put us right at the last day of the year where we might reach that 25, 26K area. And then we might see one more flush out before starting the bull run. And over to Bitcoin on the 2-week time frame now. I have just overlapped that bottoming pattern from the 2014-15 bear market. And we can see how similar it is here. We had this dead cat bounce, came back to the lows, spent some time pretty much going sideways here. And now we're looking for another bounce, possibly to the 26, 27K area as we do head into the end of the year. But just pulling up the VPVR, what we can see is this massive spike in volume here down at these lows between 18 and 21K. We see it's much more bigger than the volume spikes at all these other previous price levels over the entire bull run and bear market up to that point. And this reinforces what was in that intro by Glassnode that shows that a lot of Bitcoin has changed hands here at the lows. And the people that did buy in this range have capitulated, and the money has changed hands from these price levels down to these lower price levels around 18 to 21K. Again, that's shown with this volume spike. We do also have a 2-week order block down here with this blue rectangle, and I think this will be a key order block to get back above. The top of this order block is at 21,850. We do close this 2-week candle at the end of the week. The previous 2-week candle did close just inside this blue box. If we were to zoom in, we'll have to see how the rest of the week plays out, and perhaps the following 2-week candle, we may try to push above this order block. But what I want to look at on the 2-week time frame here is the RSI and the previous bear markets. So just switch to the log scale. It will warp these lines. What I've got here is a green and a red zone on the RSI, and this middle section in white, which is between a 46 and 47 reading. And basically what we see is once the RSI does break into this red zone, indicated by this white dotted line, the next white dotted line is where we break back into the green zone. But what we can see breaking into that red zone is during the bear market. This indicates one more final capitulation to the lows. Then we spend time consolidating, spending time in the red zone on the RSI. Once we break back into the green zone, we can see we start the next bull run. We also did that back here in the 2011 bear market, even though it was much shorter. We did break into that red zone. Once we broke above it, we started the next bull run. Looking at 2018-19 bear market, the same thing. It did act as support here. We did hold this green zone for a while as we were forming this base here. We broke into the red zone, had that final capitulation, spent some time consolidating in this red rectangle here. Once we broke back into the green zone, we started the next bull run. Looking at our current price action, we can see it did act as support for a little bit here. We did get this dead cat bounce. Once we did break into the red zone, we had that final capitulation to the lows. Now we're spending time consolidating in the red zone. And once we do break back into the green zone, then we can expect more acceleration in price and the next bull market to fully start. Currently, we're sitting at a reading of 39 on the RSI, and again, we need to get above a 47 reading. Looking back at the two previous bear markets, the 2014-15 bear market, which is quite similar to our current one, we spent 392 days in the red zone. In the second bear market here, we spent 147 days, and our current bear market, we have spent 182 days. Another thing we can look at on the stochastic RSI on the 2-week here, we have broken above this 20 level. So we have gotten out of this bearish control zone that we spent quite a long time in, ever since back at the end of 2021, which was back here when we were at 45K. We are finally above that. We haven't closed this 2-week candle yet. We do have until the end of the week. But if we don't have a big drop before then, the stochastic RSI will be above that 20 level. And it's encouraging that we are going to have a bit more of a move here. And if we were to have that move up to the 25, 26K area as we head towards the end of the year, we could see the stochastic RSI come to the upside here over the next couple of months. And we'll also be watching for the RSI to possibly try to test this green zone. But that's about all for today. Again, I want to try to make these videos a little bit shorter. So I am breaking this one into 2 parts. The next part will be out tomorrow. We'll look at the weekly time frame, the daily, the 4-hour, and also a market cipher. So thanks for watching. I hope you enjoyed that analysis on Bitcoin Mamo. I'll see you next time. Bye.